Well, for more on the markets, do want to bring in Sylvia Jablonski, who is the co-founder and CIO at Defiance ETF. Sylvia, great to have you here with us today. It is Inauguration Day, and since the intentions from the incoming presidents have largely been telegraphed, historically, what would you say that the markets pay closest attention to on an Inauguration Day, such as where we find ourselves right now?
I think the markets have been reacting just about every day since the election, before the election, after the election, the Georgia runoff, and I think the markets are probably ready to move forward with all of this. So I think today I would expect some optimistic activity in the markets. I think there's a lot of talk about now President Biden coming in and passing that 1.9 trillion budget. We'll see if it passes in part or in whole. But I think the idea is generally that the president will support stimulating the markets. Jay Powell will support the markets. Janet Yellen will support the markets. And overall, that'll be good for the American economy, especially for small businesses and people who are out of work. So I think today is just sort of the beginning of all that, and we might see some optimism coming into the markets on a broad basis across most sectors, I would say.
As well as the old adage with equities markets, buy the rumor, sell the news. Well, the news today is the Inauguration Day, but as for the rumors that are going to be swirling around, what President Biden will then, once in office fully at noon today, what he will prioritize going forward, not days, weeks, but months out, and perhaps even years from now. What are some of the rumors that investors are going to be paying closest attention to, and how will that impact certain sectors? Which sectors are you watching the closest to try and pick winners and losers under Biden?
Yeah, that's an absolutely great point, and I think that it has been a market that has traded very, very strongly on rumors over the past year. So, if we think about what the longer-term rumors might be, I would think a sector like clean energy, green energy, anything that's sort of in the ESG camp would be poised to do well, as the president might invest there. Infrastructure is another one, against small caps longer term because of the fiscal stimulus. Where the market might worry could be around regulations. So there is some sort of suspense about what might happen to the top FANG stocks and the Facebook, Microsofts, Googles of the world. What will sort of come in terms of regulation there. I also think longer term, one of the worries will be taxes. I just don't see that being on the docket for the next year at least, just because the economy is in such a fragile state, and even President Biden is coming out and saying we need to essentially fix and reinvigorate America. So I think for the next year, we're sort of safe from taxes. But those would be the rumors, the sell the rumor stuff.
Certainly, yeah, that has been a heavy topic of conversation coming into the election cycle, even post-election, and Inauguration Day is not going to be any different. Investors will still be talking about what the future looks like for individual taxes and corporate taxes, and the prospect of either of those being raised in the future under the Biden administration. So great of you to bring that up. Given the fact that we did bring up, though, future and incoming Treasury Secretary nominee, we should say, Janet Yellen, of course, a person that has held the position of federal Fed chair in the past. And so for the Fed Bank, of course, there is this knowledge of how that works, and she's been echoing the statements that we've heard from current Fed Chair Jerome Powell, saying that we need to do more to help the economy. She was saying yesterday the U.S. could afford a higher corporate tax rate, though, as well, if it coordinates with other economies around the globe. What does this mean for investors?
I think most of what nominee Yellen was saying is in line with what we've heard from Jay Powell and what we've really heard from President Biden. I think it's that America, the markets, the economy need fiscal stimulus to survive. We have 11 million, potentially plus or minus, depending on the day, unemployed. We need to get them back to work. Small businesses, the service sector have disproportionately suffered, and that has to be remediated. So if there's any sort of, taper tantrum or pull back on funds, I just don't think that, the economy could realistically grow and move forward. And I think we have a lot of positive momentum now. Corporate earnings are starting to look pretty good. Some of the liquidity that came into the market last year has really helped us to just get to where we are, which is, a recovery. But to keep it up, arguably, collectively, you need that support. So I think, having all of the big bank, central bank, sort of geniuses in the world in agreement that we need to essentially pump the market and put, fiscal stimulus and liquidity into the market and continue to stimulate the economy is a really good sign. The corporate taxes, the market's not going to like that. Big corporations won't like that, but it depends on what the tax hike is. If it's dramatic, it will probably set back the market and corporate earnings and reduce CapEx spending. If it's, a slight increase, then it probably won't have a big impact on the market. So it all sort of depends on where it goes. And my sense is that, where GDP growth goes, it will be a factor in, the president's decision on what the final numbers will look like. But tax hikes now just wouldn't work for the market. I think we'd see a pullback if that happened.
We're going to be watching that very closely under an anticipated Treasury Secretary, Janet Yellen. Who knows? Maybe we'll even get Harriet Tubman on some $20 bills. Let's restart that conversation. Sylvia Jablonski, who's the co-founder and CIO at Defiance ETFs, joining us today. Thanks so much for the time, Sylvia. We appreciate it.